What is going on, everybody? Today we are going over DocuSign, ticker symbol DOCU. Yes, Cathie Woods Ark Invest bought a whole lot of DocuSign. No one is talking about DocuSign Stock, but they did 5x this year in 2020. Went from about $70 to like 250, 60 to 250, something like that. We're gonna read financial statement. We're gonna see if this business is profitable. We're gonna see what the insiders are doing. I love DocuSign. I use it. I didn't know it has a stock, but I use it. It's from all the competition. DocuSign is the brand name. You just sign stuff electronically, whether you buy real estate, all that stuff. Look what we got here. Join 500,000 customers, hundreds of millions of signers. It's time to agree better. Let's watch a quick video and get us started on the right way with DocuSign. Let's go.
Step into the agreement cloud. Agreements are everywhere. From 100-page contracts to one-click consents, business runs on agreements. But in a world gone digital, old-school agreements make things needlessly hard and slow for everyone involved. It's time to agree better. With the Agreement Cloud, you can get agreements done faster, friendlier, and at less cost. Prepare an agreement with just a few clicks. Automatically include all the right data from your other systems, and allow users to customize the contract according to customer needs. Send, track, and sign agreements from practically anywhere, at any time, using the world's #1 e-signature app. Act on completed agreements automatically. Collect payments, update other systems, trigger downstream processes, and more. Manage agreements in a safe, smart way, with a single secure place to store and search agreements, and use AI tools to identify hidden opportunities and risks. By automating how you agree, you can do business faster, greener, with less risk and lower costs. And you can make things easier for you, your employees, your customers, and your customers' customers. Let's agree better. Together. DocuSign Agreement Cloud.
So let's go over DocuSign. I'm in Yahoo Finance, guys. Look what we got. Price today of around $235. We're gonna find the fair value. Hopefully, if we can get like a positive earning per share and growth. Gonna see what we see. 52-week range between $65 to $290, so it's down about 30% from its all-time high. Same as Zoom. All those stocks that just moonshot in 2020 lost about 30% of their value in the last 2 months, probably about COVID news, vaccines, all that stuff. Market cap is pretty low, $40 billion, $43 billion. It's not pretty low, but compared to the crazy and insanity of this year, $40 billion, it's nothing. Like every other company is $100, $200 billion worth now, with absolutely nothing behind it. Not absolutely, but not a lot of things behind it. According to Yahoo analyst, it is overvalued. Let's go over the financials. Before we do, 1 year target is 275. So 20% from here to the 1 year target. The 1 year target is a couple of days from now. Let's see the financial statements. Let's see what we got here. So I'm in the financial tab. I will start here. Income statement. Let's see what we got. We got total revenue. I want this number to grow. I'm gonna do a couple of Warren Buffett ratios to see if it's a good stock. So basically they have been growing. Look at this, from 2017 even. 2017, 380 million, 518 million, 700 million, 973 million, and year to date $1 billion in total revenue. So they're growing and growing and growing. This is a great sign. I like to see that. I want to see a gross profit also growing, 791. Again, not complex. Let's see the ratio that Mr. Buffett is looking for. Let's see the ratio so you guys can understand how to read financial statements of a company. Is not rocket science. It's pretty simple. Let me show you how. So you take this number 791.779. I divided by the total revenue, this one, by the first. So I divide the gross by the revenue, 1,057. Okay, 791 divided by 1,057, and I get the number of 74%. So their gross profit is, let's say, 74.8, 75% gross profit. That's pretty awesome. That's pretty awesome. The problem with the tech companies that all their gross profit, you know, they just give it back to they give it back as net, because they expand and marketing and more and more and more research and investment and just a lot of marketing at the end of the day. I don't know DocuSign business model specifically, but we're gonna see the net income. But for the gross income, Mr. Buffett does look for 40% and up growth. Regular company, for a tech company, technology company, it's about 80%, and 75%, it's almost there. The problem with this is that I go here. The problem with the gross number that I saw, they're making 75 gross, is here. The diluted net income, negative $200 million. And if you have $200 million negative, that's a problem. That's, you know, you lost all your gross revenue. It's going on expanding. We're gonna see exactly where it went. But they went from a negative 400 million, they got better, to a negative 200 million. So maybe in about a year they will be profitable, and then it's a good time to buy. But now that like $300 or $250, that's a lot. That's not a good sign. Mr. Buffett is looking for 20% net plus, positive, 20% positive. And if you are 75% gross profit and you're negative in the net, then you lost all your gross on other stuff, and we're gonna see exactly what your money went on. So I'm right here in the second column, balance sheet. That's it. That's what you need to look. In the income statement, you're looking for 40% and up gross in regular company, and 80% in technology company gross, and 20% and up in the net. And if you don't have that, that's a problem. So let's see what we got. Total assets 1.9 billion. It grew. This is beautiful. Look at this. They went from $500,000 to 600 million to 1.6 billion. They added another $1 billion to their asset, and then 1.9. They're growing. Don't get me wrong. This is a great company. I just want them to have a net positive before I even consider. I'm not considering buying a company with a net negative. What bothers me is this one. Let's click on the total liabilities. So if you see here, if you open the total liabilities from the 1.9 billion dollar in asset, they have 1.3 billion in liabilities. Half of that is short term, but I don't care about short term. They can pay short term. The problem is the long term. Long term debt, 600 million. A lot more than 430 million a year ago. So they added another almost $200 million to their long-term debt, and that's not good. They added another 200 million right here. Long-term capital list, you see? Because the long-term debt didn't change, 438 to 465, nothing changed. Maybe another 18 million, that's nothing. Long-term capital list, did you open another 100 offices all over the world in 2020, and now you owe another $160 million to pay that rent lease in the next 5 years? Most likely. I don't know exactly what they have done, but they added another lease of $160 million, and that's what I see the problem. Here we go, long-term capital lease obligation. Well, there wasn't nothing here in 2019, 2018, 2017. All of a sudden the company made 5x their share price, and they just take 160 million and they build lease offices, expand, as they say. I don't like to see that. I don't like to see that at all. I like the company to focus on their core business and not spend money on expanding offices and renting, whatever the case. Let's move on. Just my opinion. There are a couple of good things in the cash flow, and again, that's all you need to do in the balance sheet. There's another thing that I can do. Mr. Buffett is doing in the balance sheet. He takes the long-term debt and he divided by the positive net income to see that the company can pay their long-term debt in 4 years or less. I can't do that because the positive net income doesn't exist. They have a negative net income. And if they didn't take $150 million long-term loan to buy some offices or something, maybe they will be profitable today instead of maybe a year or two from now. That's what I don't like. Let's move on. Cash flow. In cash flow, I got a couple of good things. I like to see a positive, a negative, and negative. And I see a positive, positive, negative. So 2 out of 3. Okay. So let's see what we got. Operating cash flow, the money that comes from signing the DocuSign online. That's growing. I like that it's growing. It went from 50 million in 2018, 76 million, 115, that's a lot, and 130. So they're growing. Their business, DocuSign specific, the core business, money comes from operation, cash flow comes from operation. All those people that are subscribing 10-15 bucks a month or something like that just to do online DocuSign, it's growing. That's good. The problem here is the second one. That's where I don't like to see investing. Investing, I like to see a negative, and you can see that the year before they had a negative 300 million. That's what I like to see. Positive, negative, negative. And all of a sudden, and before that we got a negative, 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 all good sign, and all of a sudden we got a positive. So I'm gonna dig deeper. Investing cash flow from continuing, it's gonna say what it is exactly. Cash flow from continuing investing activities. Exactly what they have done. Net purchase. Here we go. That's the problem. Net investment purchase extra 240. I'm gonna click here. I'm gonna see exactly what has happened here. They purchased some business and they sold some business. I don't know what they have done. But this number should be negative. So if you sell an investment and you buy another investment for less, I don't know, maybe they sold a division or I don't know what they have done. But at the end of the day, if you're looking for a company to evaluate, in the cash flow column, you're looking for a positive operating cash flow and growing, negative investing cash flow, and negative finance cash flow. That's your basic 3 rules. If it's not 3 out of 3, I don't jump in. No, I don't jump in. Let's move on. Not a lot of info in here. All none. So no issue of that. No capital stock. No repurchase. No buybacks. No nothing. I don't really know if it's the case or they haven't updated just yet. There's an issue of that here, like 2 years ago, $560, $500 million. It didn't repay. I don't see them paying that $500 million loan in the last 2 years. Okay, and this number, again, capital expenditure, if I had the net income positive, I could divide this number, capital expenditure. Here's a tip, guys. You can take the capital expenditure divided by the net income that you find in the income statement, and if that number is below 25, then you got yourself a very efficient management. They spend their cash flow very efficiently. If it's between 25 and 50, the number that you get, it's an average company, average spending, and you will get average results. And if it's over 50, the management spend their money, the free cash flow, poorly, and the shareholder will suffer. And if you look at the end, free cash flow, it's still the same: 45 million, 43 million, 45 million, 36. They made extra $10 million in the last 4 years or so. It's not a good sign. Let's see what the insiders are doing. I'm in this website, Open Insider DocuSign, SEC Form 4 Insider Trading. And before we go over that, maybe it's a good time to introduce myself. My name is Ziv, also known as Finance After 40. While I am new to YouTube, you can find me on TikTok under the same name, Finance After 40, where I have about 18,000 plus community members following me, as well as about 150 plus community members on Patreon, where we do selling options for income using Market Chameleon. That's the software that I use, and I call that software the Holy Grail of Option Trader, which you can do a 7-day trial, all in the link below. If I bring you guys any value, subscribe to my channel, hit the bell notification, and leave a comment which stock would you like me to do next. Highly appreciated. Let's go over the insider selling or buying of DocuSign. Let's see what they've done. Oh, look at this, guys. It's all sale. Okay? All sale. Let's start. We have December 22, where we are. Let's start with December. December 22, December 18, December 10th. Okay? Docu, that's where we are. Sell, sell, sell. Director, chief revenue, COO, solid price 245, 244, 225, $4 million, 1.6, 1.3 million. Okay, after that sell option exercise, that's fine. After that, let's go in November. We got November sell, October, September, September. Sell, 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 sell. I'm painting you a picture. Sell, 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 sell. I didn't filter just sell. I filter all. This sell and option exercise. Sell, 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 sell. Sell, 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 sell. Option exercise starting January, a year ago, December 26. All the way selling from $75 to 100, 120, 130, 160, 200, 190, 220, 220, 245. Everyone are selling. Who are they, those everyone? Director, chief revenue, COO, director, COO, director, chief technology operation, chief revenue, COO, Ulrich Scott V, sold a lot. Ulrich Scott V again, COO, director, chief technology, operation officer, chief technology, CEO. They're all selling. No one is buying DocuSign at $250. And if you see videos on YouTube and TikTok telling you, hey, go buy DocuSign, it's gonna go to the moon, maybe, but you better read the financials and see what the insiders are doing, because the numbers don't lie, people do. Look at this is crazy. It is all sell. And let me just show my point in here. See, you see transaction filing P for purchase and S for sale. I didn't just let's go just P. Okay, let's go just P in the last, I don't know, 4 years. Let's go just purchases in the last 4 years. You got absolutely nothing. So all the insiders are just selling on the market. $50, $60, or $200+ doesn't matter. There's absolutely no one that bought DocuSign purchased from the insiders in the last 4 years. That tells me that, that tells me the story. I'm not buying DocuSign. You can do whatever that you want, but if you are a DocuSign shareholder, I hope you watch this video, know the financial advice, and ask, I don't know, call the company, ask the relationship department, investment relationship, hey, why everybody sold in the last year? Why nobody bought anything in the last 4 years? Can you explain me that? Try and get an answer. If I bring you guys any sort of value, subscribe to my channel, hit the bell notification, leave a like, and comment below which stock would you like me to do next. I hope this was valuable to you, and I will see you in the next video. Thank you very much, guys. Yeah.